Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Thursday, July 13th, 2023. Before we jump into the charts, I want to encourage you to please click like, share, subscribe to the Wicked Stocks YouTube channel, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this. Daily SPY report, daily triple Q report, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube. Both all in 5 to 10 minute video format that cater to the 3 to 5 week swing trader to 3 to 5 month near term investor, always looking for 20% moves on those underlying stocks. Check out wickedstocks.com. So let's jump to the charts. Just to backtrack a bit, about 6-7 weeks ago, we settled above this 18-month channel top that is presently at 191.39, ultimately anticipating a test of the 414.49 all-time high. The timing of that is next to impossible, but I will say over the coming months, let's put it that way, I'll also say over the next 3 to 5 months, if we close above what is our initial objective on this move, 284.01, considered midterm resistance, this rising channel top able to contain buying on a monthly basis, and below which the market's susceptible to falling back into the low 190s over the next month or two. And that is really sort of the dynamic as we look through August trade. Not unless we close the week above 284.01 by a 1% margin, because of the longer term line study that this is, it really deserves that 1% violation of 286.85. In other words, it's not going to happen today, but if by chance tomorrow, Friday, the end of the week, we settle the week out at 286.85 or higher, we are now expecting 414.49 as little as 3 to 5 months. The vertical rally continues. Until then, we can, as we have been, stall out here at 284.01 and fall back into the low 190s over the next month or two. By the end of September, I'd say at the latest. Now, we're hesitating here in this vicinity, and I will mention that on the weekly chart, we've got 247.96. This is our downward pivot point. This is the level that if settled below at the end of the week, and I don't see that happening either, but if we were to close tomorrow, Friday, below 247.96, that does aggressively pivot the market south into the low 190s. So what is considered attainable in the low 190s below 284.01 becomes expected below 247.96. And that's not to say that you can't prepare, whatever that means to you. You can't position yourself for the low 190s as we test the mid 280s, 284.01. We've been testing this area for the better part of a month now, several times. And each and every time it presented an opportunity to reach for 190, for instance, out of the money puts that don't expire for at least 3 months. I'd go 6 months out on that. That is still the play. Near-term traders, as I've been mentioning, could reach for 245 or 250 out of the money puts that don't expire for at least several weeks. And that is the downside play right now. So closing below 247.96, the low 190s likely then by the end of August. And that's just sort of a reminder of the big picture. Now for the day itself. Downside. I'm going to cover the downside first and the upside then next. And that is to say that we've got 269.61, nothing more than the low settlement price from, I think that was Monday. And the Tuesday settlement price was very similar, but the low settlement price following this move high from about a week and a half ago is 269.61. You can see lower right here in the support resistance column. It is an intraday support level. Intraday resistance. Do I show it? I don't think I do today, but I can describe it. It is nothing more than a 5/8 upside Fibonacci of the last week and a half. And it actually, we didn't test it on Wednesday, but we came close to it. It's 276.93. That's a level that is unchanged, that carries over from Wednesday. 276.93, able to contain intraday strength. 269.61, able to contain intraday weakness. We could trade inside the 276.93 down to 269.61 level for a good part of the day. That is well suited for aggressive day traders. But if we break break 269.61, there's a decent chance we could fall all the way to 260.70. This is consistent with having tested this midterm resistance area in the mid 280s, then in the upper 270s and low 280s a couple of weeks later, now in the mid 280s. Having tested this area, as I've been mentioning, this channel bottom at 250.83, which is the 247.96 I showed a moment ago on the weekly chart, this channel bottom considered a 1 to 2, 2 to 3 week target. Now we've spent a week now sort of hesitating up here, and the question begs, how soon might we actually test 250.83? Well, I can tell you that if we were to close today below 260.70, we probably would test 250.83 tomorrow. I'll also say that merely closing today below 269.61, the low settlement price following that move high, does add weight to the market. And if we don't test 260.70 today, we can over the next several days test 260.70, which is dropping at a pretty decent pace and will over the next few days, 3-4 days, converge with this 250.83 anyway. So you can see here in the lower right, I've got 260.70 as a session containment level. Session means day. This is like floor trading talk. I've used the same terminology for over 30 years, and I know I get a lot of questions. What does session mean? A session is the trading session. It is the trading day. And it's just an old habit that's hard to break. It's still a valid way to speak, but for those of you who are not well versed in the language, so to speak, I do have to explain myself from time to time. So 260.70 able to contain session weakness, and if we were to close below this simple channel bottom, 250.83 likely tomorrow, I will say. Keep in mind, 250.83 is expected anyway, so long as we continue trading below 284.18, having tested this meaningful channel resistance, I would expect 250.83 as a logical, a realistic, bearish rotational downside target as a 2 to 3 week objective, and that still remains in play. And once again, if we were to close below this structure, 250.83 in the coming days, that does set us up for the lower 190s. So this is our downward 3 to 5 week sell signal that I outlined a moment ago when I was talking that weekly chart. Let's talk upside today. You know, I don't know if I've got an enlarged version of any of this, but I'm going to go back to this chart, I suppose. This is a longer term rising 1/3 speed line that is at 254.01. I don't even have it shown here in the minor points. I'm really focusing on the channel bottom itself. But let me get back to 276.93, talking upside. If we happen to push through or open above 276.93, we just might reach that 284.01 level on an intraday basis, 284.18 on the daily chart. It's 284.01 on the weekly chart. So if we push or open today above 276.93, we could push. I think it would be, I don't expect it. It's a pretty significant rally today, but it is certainly possible. We've seen rallies like that. We've seen volatility like that over the recent months. It's just right now we seem to be locked into a quieter volatility. But once again, getting back to this point that's taking me forever to make, if we push or open above 276.93, you should allow at least for 284.18, 284.01 on that weekly chart, where once again we can top out through August, and below which the 250.83 formation likely within 2 to 3 weeks, the lower 190s attainable over the next couple of months. And in terms of, I don't know how to flesh this out any better than I already have. I will say, in terms of you options traders, if we break into the low 250s soon, you could reach for 285 out of the money calls that don't expire for at least several weeks. If we close below 250.83, you could reach for 190 out of the money puts that don't expire for at least a couple of months. I'd go out on that. And finally, last thing I will say is if we settle the week tomorrow above 284.01 by the 1% margin of 286.85 or higher, you could reach for 314, 315 out of the money calls that don't expire for at least a month. This would be our initial 2 to 3 week objective. Or you could reach for 415 out of the money calls that don't expire. I would go 6 months out at least, maybe a year on that. But I do think if we close above this rising channel top at 284.01 by the 1% margin, I think you can expect a continued price acceleration and increasingly vertical market, and within as little as 3 to 5 months, reaching for 414. 1449. You know, I'm going to leave it at that for Thursday's daily Tesla report. Please click like, share, subscribe, and check out wickedstocks.com.